All right, YouTube family, welcome to another live analysis session with the Wealth Group Academy. Now, today is an interesting day for those of you from the UK. It is bank holiday today, and so the liquidity in the low for pound pairs and some European pairs may be a bit lower than usual. Okay, so what I'm going to do is give you my breakdown strategy play for the week, especially on Swiss franc pairs. I won't take too long. I'll have a look through a few pairs. If you guys have any suggestions, you let me know, but I won't take too long here. So again, I'm going to lean off again USD CHF at the moment. Watching what the price has done, it's very intriguing to see where we're going to go. So I wouldn't say the price is in a range from the daily structure here. When it comes to this month here, we've had very strong bullish action and bearish action. Okay, again, you remember the trade that I gave you guys. The price went from this point right here all the way down to the short period, the point of shorts down to here. At the moment, the price is seemingly, pushed, I would say, not too far for, not too far to the short or to the long side. It's kind of in between. But when we look at the structure of price anyway for today, what did we have? So we had an inducement for a long here from the price action, and I can see we've had a very strong piece of action for the day. All right, now the inducement was minor here, but still the price gave us quite a strong piece of long price action. On the other hand here, we also had this inducement for the short side. And so my question now is, which way does the price want to go? So if you're looking at USD CHF here, we saw on Friday a very interesting period where the price was very strongly short. Now, this is because of what we saw with the Jackson Hole synopsis. This was triggered by what the Jerome Powell was saying, and I discussed and covered this in the video on Friday. But we saw USD CHF push very strongly short. And into Monday, we've seen a reversal signature, which the price has given us a long up to about the area of supply, which triggered the short in the first place. So I'm watching right here now, probably not the right color to use. Let's get some slate gray here, or gray. What I am looking for is to see how the price is going to behave, moving forward. Now, so far, we had a very strong short, and we can isolate this to a smaller order block here on the 30-minute. And the price is interestingly, making its way, okay, in this area. We had a very strong area of selling for a moment before the price pulled back up here. Now, if this was to continue going short, then I would expect it to continue possibly throughout the whole week. Now, I usually don't trade on bank holiday Mondays, but my eyes are on this demand zone here. And any slightest break beneath here, then this could be a good trade for you guys to be able to capture. All right. And on that note, I also want to look at Swiss franc Japanese yen, because I've noticed looking at the price that what we're seeing here in terms of this bullish run from the morning into the afternoon was from Switzerland. Now, if you look today right here, we had a minor induction for a reversal short, and this gave us so far 88 pips approximately. But you can see that Swiss franc Japanese yen is pushing short whilst USD CHF is pushing long. So when we isolate this fact, what was really going on here is we're seeing a strength reversal. Now, I spoke about it to you guys a week ago, but I'm bringing this back up again because Switzerland is a very interesting country that's going through, I would say, very interesting changes also. So there's a lot of interesting things going on. I think I've used interesting quite a bit now, but still, I'm saying interesting because it could go either way. But so far, last week we saw the Swiss franc Japanese yen give us a very strong long and then come back now this week and given us a very strong short. And we've also seen USD CHF push strongly long. So we're seeing weakening here with the Swiss franc. Now, the question as to what's going on here would be why. And there could be many reasons as to what's going on. Now, Switzerland itself as a country is part of Europe, but not part of the European Union. So the trade agreements that it has as a country, it is very dependent, I would say, on exports for it to be able to produce the services. Now, Switzerland as an economy, and I'm going to show you guys what the structure of the economy for the Swiss franc looks like in a moment, or for Switzerland, is going to be very interesting to see. So when it comes to what's going on right now with Switzerland, this potentially would be something that I think is key for us to see. Now, I'm going to show you in a moment what I have here, and then after we'll come back to the charts. But anyway, So far, we've seen a larger reduction on the short side, which may mean that the price may reverse and we may see a long, and possibly all we're seeing is a reversal. Maybe a lack of volume from the London session might be attributed to that, but we'll come back. I'm going to show you some stuff on the Swiss franc, but then we'll go back and see what's going on later on. So I'm going to steal this Bitcoin chart and I'm going to put on pound USD first. So interestingly with pound USD, I gave you guys the call for the long on the H4. The demand zone is still holding at the moment, even though we're in this bearish structure. And if you remember from what we said before, on the weekly structure of things, we have this demand zone right here that the price is hanging on to. And I'm expecting to see very, very good bullish action come through very soon. So from here, the price has held well in this weekly area of demand and hasn't broken beneath it. And if the price breaks past this high right here and continues, then we should be seeing some very strong bullish action on the pound. Now, fundamentally speaking, there is not much to say at the moment. The fundamentals are actually not looking good for the UK because of the rise in COVID cases and deaths since March, which is not a good sign at the moment. But nonetheless, from what we've seen here, we've seen quite a good recovery so far on the price. We've had about almost 160 pips. Oh, actually, no, 170 pips, excuse me, all the way up to here and more. And if the price continues in this direction, then definitely we could be seeing the price recover back to the 1.40 region. Now, on the hourly time frame, the structure of the price is not the greatest. Okay, we've had a bullish run that we've seen here from this day, and then the price is kind of capped out over here. And today we haven't really had much range, which I told you most likely the price wouldn't do much. Now, because this is pound USD, then that means from 12 o'clock GMT time, then there would be activity going on. So for example, right here, you can see that the price was really, really dead. Okay, and then coming into about 9 o'clock, 9 to 10 o'clock, the European session, there was some liquidity in there that would drive the price, but not much. And then as you can see right here, 1 o'clock, so New York, Chicago, when those sessions open, then we have a little bit more of activity, but really we haven't had much. Okay, and this is just due to bank holidays. So we've really had about 41 pips for the day, which I mean is not bad, but honestly is not great either, considering what other pairs have done. So when it comes to analyzing pound USD, I'm rather allowing for when the UK officially opens and the London session comes back into play for tomorrow to see what kind of, see where the money drives the market really, and see what institutions will be doing. But for now, there isn't much I could say apart from looking at the structure of price. We could see even a continuation long. I'm watching this supply zone region here. I'll be specific and use the exact area here. So right here, this supply zone is acting as a demand zone at the moment. We've had a very strong sell from here, especially if you identify this wick right here, which is important in this structure going across here as to where the price stopped from. But looking at the structure here, we've had a break above and a return right here with the price stopping here, and then the resultant reversal of that bearish move. So the price may easily into tomorrow continue from where it is, especially if it starts to break supply structures. If I say, for example, here, if we get the supply structure broken from here continuing on, I think we really will be seeing a very interesting continuation towards the upside. So I'm going to put this around about here. And let's see what the price does moving forward from this region right here. So a break above and a return would really give us a very strong indication of continuation long. And my next targets really would be towards these areas of supply right here. This will be my next target right here, or about 1.38. So about 65.2 pips away. But really, if the price is going to get to here, then it should might as well do everything else, because there are many highs the price needs to go for. So at this point, we really may just see what I'm expecting, which is the 1.4 level to be hit. And that may be it. Now, on the other side, if we see downside movement, then the downside movement, I'm expecting the price to get right back to 1.3675 beneath these lows here. Or even at these lows, the price could get to these lows, use the major area of supply that we've seen from the market here, and then just continue to take off again. So the chance for either in this market, right, in terms of probability, is quite 50-50 at the moment. So I wouldn't make any movements on the pound until the London session opens. So let the bank holiday pass, and then after we can make adjustments for what the price is doing from there. Okay. All right. Let me grab this. Let's see what chart I can still, can I still any? Doesn't look like I can. So let me open up a new one. So Euro USD. Okay. We've had quite a nice piece of movement here. Again, the reason why the price is going long at the moment is because we're inside of monthly demand. So this demand zone area here on the monthly is a very large area. On the weekly time frame, and then also down to the daily here, if I keep this zone open, you can see, although the price did this structured movement here, so remember if we talked about this here together, then you would have known, excuse me, I should say when we talked about this together. I'm quite tired today, guys, so apologize. So here's A, and here is B. So from this A to B movement here, okay, I still think that the price is bearish, but what we needed was the structure to complete itself for a C. Now, the C swing that we had wasn't sufficient at this point here. And so the price has dropped lower to form a lower swing low. And now I expect the price to give us a C movement back up here before we see some shorting. Now, because we're monthly demand, the gravity of the price there could really send the price even higher. So I wouldn't put it past Euro USD to do a higher point and even get back up to around about here, or higher movement and get back up to higher points in the price. But from what we're seeing here, I do expect Euro USD to continue going for a long from this structure. And I'm going to delete this and use the same chart so I can go down to lower time frames without the lines and stuff flying everywhere. So again, on the H4, we had the beginning of reversal taking place down here, and the price has really got back to area of significance, which is above this high right here. So this is where we are right now. So the price has got above this high, and we're seeing a little bit of a reversal pattern, but I don't believe it will last for too long. If I stay on the H4 and just zoom in at one time here, supply is right here, and I believe the price should probably pull back to supply, or this supply zone, like as follows, and most likely use this area for demand and continue. If it doesn't and it breaks lower, then that makes it cheaper price for us to get in. Then I would expect the price to get somewhere back down here even. But from here, I expect the continuation to happen. Now, I've always wondered about the H4 supply zone, but it makes sense in the model of what I'm looking at with the price. If I go for this supply zone right here, here we go. This area of supply right here, 221, I expect to see very good bullish movements from here, about 221.5. This is what I'm looking at if the price gets here, and that would be a fantastic movement. And then from there, we will have a very clear view as to whether the price is going to continue going long, or if the price is going to go down on the short side. Okay. So just quickly, when we look at the price here, always remember to keep your mind open on both sides of the market. Don't be biased, guys, because biases always end you up with losses, because it's either you're really right or you're really, really wrong. And one of the things about bias is that having a trade bias, okay, is that sometimes when you're wrong, you still think you're right and you continue taking trades until your account teaches you the lesson that you actually, or the account just shows you that you're wrong. Try again. Okay. So when we look at the Swiss franc anyway and what's going on, I want us to have a look at what potentially might be driving these movements with Switzerland. And then after, we can make some assumptions from there. So what I usually do now, Switzerland is a very interesting country, but one of the things I like to do is always just observe what's going on with central banks. Now, just to show you the structure, first of all, about Switzerland, and then after we can take this after to other places. Let's go here and pull up this news for you. Give me 1 second, guys. so that you guys can see this. All right, so let me put this here. So let's do this quickly. Yeah, here we go. All right, I wanted to get this for you specifically, guys, because I believe it will help you the best. So when we look at the Switzerland as an economy, when you're doing anything to do with the financial markets in terms of currency trading, you still need to always understand the economic infrastructure. Now, the infrastructure of the Swiss economy is different from many economies. All right, now the Swiss franc as a currency is a consumer currency and not a commodity currency. Now, Switzerland doesn't have an identifiable commodity. I mean, watches is not a commodity because it's made of different commodities, made of different materials. A commodity is something that's more of a raw material. So, like, for example, gold or oil, things of that nature. So, even though Switzerland does produce very notable things that Switzerland is known for, it's not a country of commodity, it's rather a country of consumer. So the Swiss franc is usually used to make purchases for things in terms of exports rather than for it to be used as a currency for in terms of tied to a commodity like Canada with oil or Australia with gold and etc. All right, now Switzerland has the second highest gross domestic product per capita in the world. And at the end of 2015, the GDP stood at 77943. All right, which is approximately 73,000 euros or 81,000 US dollars. Now, I wanted to show you this picture. Really, that's my main point for you to understand this. So, in terms of Switzerland, okay, Switzerland as a country, and let's put this here. Yeah. So the main trading partner, first of all, is the EU, okay, which I just said a moment ago. And the reason is because of the geography of where Switzerland is located. Is in the middle of European countries that are all connected to or all in the EU, even though Switzerland isn't. Okay, so its largest trading partner is basically the EU. Now, 78% of Swiss imports are from the EU, while 43% of Swiss exports are destined for the EU. Okay, so already there you can see that not necessarily. I'm sure there is a trade deficit in Switzerland, and the reason is because it doesn't produce that many things, and so in where it is located geographically, it needs to export. It needs a lot of imports in order for its economy to run. Now, it does export really good goods and services, but I want you to understand here the goods and services that Switzerland exports, okay, are these main things here, which is chemical and pharmaceutical products, machinery and electronics, and watches. All of these things require commodities which Switzerland doesn't naturally have a lot of, okay, or any of at all, okay? So a lot of the gold from Africa, for example, or cocoa from Ghana, even though recently Ghana has stopped, I believe, stopped the trade agreement with Switzerland for chocolate, I think. But anyway, some of the things that Switzerland are famed to be known to produce have to be imported in for them to then take those raw materials to grow it. So in other words, Switzerland again is that kind of country. So what can we say about Switzerland when it comes to their currency strength? So because their GDP is highly in service, okay, because there's is highly or a high service economy, all right, rather than economy of producing goods in that nature. If something goes wrong with exports and imports in any way, okay, so the coronavirus, then it's going to affect the Swiss franc very strongly, okay? This is just a fact of what we will see going forward. Because if we, for example, if their labor markets become shrink in any way, it will shrink their production, which will their main exports, which produce them a lot of money, which is tied heavily to their GDP, will shrink also. And so that can cause the Swiss franc to show some weakness. Now, recently, we've seen that the Swiss franc has been recovering and we've seen some strength there. But the only thing is, we're starting to see a bit of reversal, which is why I want to give you guys a heads up here. I'm going to read the rest of it because there's an important piece of information here. So Switzerland has the lowest rate of value-added tax in Europe. 8% is levied on most goods and services, 3.8 on accommodation services, and 2.5 on basic necessities. Every year, Switzerland spends close to 3% of its GDP, so more than 18.5 billion, or let's just call it $20.6 billion on research and development. Over 3/4 of this funding comes from the private sector. And the Switzerland currency is a Swiss franc. 1 Swiss franc equals to 100 centimes and is abbreviated to CHF or SFR. So this is the information here that you need to go for. Now, here is the one line that I wanted to go through in more detail here, and this is going to give you everything you need to know to understand what I'm saying. So about 74% of Swiss GDP, so the gross domestic product, or if you're not too sure what gross domestic product is, a quick definition you can go by is the total amount of goods or the total value of goods and services within an economy over a specific period of time. So for example, a year. So the GDP is usually calculated by a year. So every year we calculate the GDP of how much value basically was created in an economy. All right. So 74%, here it is, 74. So basically 3/4 of the economy of Switzerland comes from service. All right. And 25% is industrial. And then less than 1% comes from agriculture. So you can see right here with the structure of this economy, we don't have an economy which is very agricultural or very commoditized or very rich in commodity. We have something that they're more rich in the production and the level after, which is servicing and sales and business and things of that nature of products, but they don't actually necessarily always create the products, if I can put it that way, if that makes sense. But anyway, because we have an economy that's very heavy on the service side of things and very low on agriculture, that means that their exports are good for very vital materials is going to be very high. And so if there's any breakdown in imports and exports, especially in the imports coming into Switzerland and then the resultant exports out to the world for things like watches, Switzerland is going to be in big trouble. Okay, because their service sector, so for example, the companies behind making the sales of these products and stuff like that are going to heavily suffer. And because they don't have any strong agricultural backing to maybe say shift to kind of help for supply of things if the supply chain breaks down around the world because of issues, for example, the pandemic, then that will cause immediate trouble for Switzerland. So where are we right now? Or potentially. So this is dated here, August 25th. So this was a couple of days ago, and I held this article up for you guys. So Switzerland, and this is what it reads. First of all, I'll give you the title. Switzerland's economic recovery seen coming to a sudden halt. Okay. So here's now, if you're not too sure about what the franc shock is, this was when we had the end of pegging between the euro to the Swiss franc. There was a time in history when for lucrative and favorable import-export relationship, or import and export relationships. All right. Europe and Switzerland created a peg. It was about 1.20, I believe. Approximately on average, it was meant to be about 80% of a ratio. So in other words, it worked out to be €1 equal to 1.2 Swiss franc, something of that nature. Okay, so that ratio allowed for lucrative and useful agreements in terms of trade on imports and exports and etc. Okay, now when Switzerland took off that peg, which was January 15th, 2015, it caused a massive Swiss franc shock to any foreign exchange pair that was paired to the Swiss franc. Okay. Then the pandemic also caused something similar. And now we have recovery concerns, which is causing some very sharp plunges in the recovery. Now we may see a recovery here, we don't know, but I'm just going to read this to you for you guys to see here. So Switzerland's recovery is at risk of an abrupt end, as the pandemic resurges in the US and China and the supply chain issues disrupt the export reliant economy. You see what I'm saying, guys? So it's very widely known that Switzerland, in order for it to survive, it needs people, it needs other countries to be able to survive. And so this supply chain interruption, okay, is really going to affect them and isn't affecting them, is affecting them right now. So at the moment, you can say in a sense, okay, the whole world is relying on how the pandemic plays out and the recovery of it. But a country like Switzerland is a lot more in danger than maybe say a country that's agricultural from being in a very bad position very quickly. So it's a sentiment index by Credit Suisse plunged by almost 51 points in August to minus 7.8. The only times the gain has fallen so sharply were after the Swiss franc shock in 2015, when the central bank unexpectedly scrapped its currency cap, or what we call a currency peg, and at the start of the pandemic in 2020. In neighboring Germany, supply bottlenecks are also proving an issue. Now, why would they be using Germany? Now, Germany is the largest EU market cap contributor of any of the European Union countries. Okay. And so if something goes wrong with Germany, it reflects on the euro quite quickly, and it reflects on the European Union quite quickly because it is the largest economy of the EU. So if you're not too sure and you want to try to read between the lines, I just want to supply that information to help you. All right. So the supply bottlenecks that are happening with Germany here are providing an issue, and we're behind a drop in business confidence in a survey published on Wednesday. Now, Switzerland's economy saw a relatively strong rebound in the second quarter Q2, so between March to June. Okay. And as coronavirus restrictions started to be phased out and global demand started to recover, while the upswing had come to an end sooner than or later, reports suggest that there could be more sudden and more pronounced. The reason is likely to the resurgence of the pandemic again in the US and China, which will probably exacerbate due to the closure of transportation and production facilities what is already a strained situation in supply chain, said Claude Maria, so the chief economist for Switzerland at Credit Suisse. Okay. This is an important point that you have to understand, guys. So when you're seeing the Swiss franc doing the things that it's doing on the charts, you want to keep your eyes on these figures. And so the figures that come out this week in terms of the Swiss franc will be important. But we've run out of time, guys. So I will come back tomorrow again. I hope you guys enjoyed this. And I'll be discussing this in more detail. So keep your eyes peeled, guys. Keep your eyes on the Swiss franc.